Good evening, everyone. I'm Sai Nair from Kiran Advisors. I welcome you all to the virtual roadshow of Shyam Dhani Industries Limited. Today, we'll provide a brief overview of the company and its innovative business model. Shyam Dhani Industries Limited is primarily engaged in manufacturing and processing of 160 plus varieties of spices under the brand Shyam. The company has vertically integrated operations with end-to-end capabilities covering sourcing, cleaning, grinding, blending, packaging, and dispatch from its Jaipur manufacturing facility. From the management side of the team, we have Mr. Ramavatar Agrawal, the chairman and managing director. Welcome to the roadshow, sir. We also have Mr. Vithal Agrawal, the whole-time director. Welcome to the roadshow, sir. From the merchant banking team, we have Mr. Ashok Holani, the director, Holani Consultants Private Limited. Welcome to the roadshow, sir. So, with that, now I would like to hand over the floor to Ashok, sir, so that he could just run through the PPT of the company. Yeah. Over to you, sir.
Hello everybody. I welcome all of you in the investor meet of virtual investor meet of Shamdani Industries Limited. Friends, this is an SME IPO. The IPO will be listed on the NS Image platform. The IPO will open on 22nd of December 2025 and will closes on 24th of December 2025. The anchor bidding will start today on 19th of December and will closes around 3 o'clock. We have already done the anchor investments and have been successfully raised the shares committed under the anchor bidding category. Under this IPO, we are offering 54 lakh 98,000 equity shares of face value rupees 10 each. We have fixed a price band of this IPO between 65 to 70 rupees per equity share. The bidding lot for this IPO is around 2,000 equity shares. The shares which we are offering in this IPO, 54 lakh 98,000, have been allocated in three different categories. One is the QIB investors, wherein 50% of the issue has been reserved for them. 35% has been retained for the retail investors, and 15% for the HNI investors. And as per SEBI guidelines, there is a portion for the market maker also. They have a 2 lakh 80,000 equity share reservation in this IPO. The pre-money valuation of the company is 106 crores, and the post-money after the completion of the IPO, the market listing, the post-issue will be 1 crore, 144 crores. Before leading to this IPO process, our company has initiated one private placement of 2 lakh 86,000 to accommodate certain HNI investors, wherein company has offloaded 2% of the equity of the company. And in this IPO, we will offer 26.5% of equity, which is comprising of 25% to the general public and 1.5% to the market maker. So overall, after the closure of this IPO, the promoter holding will be 72% and public holding will be 28%. The tentative listing date for this IPO will be on 30th of November 2000, December 2025. Now, we are raising 38.49 crores at the upper price band of this issue, along with the 2 crore rupees which we have raised from the private placement of the equity shares. The entire 40 crores shall be deployed in the following heads as appearing on your screen. The first and the foremost head is the working capital requirements. The company intend to meet its incremental working capital requirement from the proceeds of the issue. We have kept around 13.26 crores for particular this head. In addition to working capital, the company is planning to repay certain of its secured borrowings in the form of CC limits from the bank taken from bank. Around 10 crore will be utilized from the issue proceeds towards repayment of the liabilities. Third one is the brand and marketing expenses. In this head, company is planning to take over the Sham brand at a national level. It is already a very good reputed brand in the regional sector of Rajasthan and Punjab and Delhi, but the company aims to make it a national level brand. So, for that, to achieving that objective, company is devising a comprehensive brand and marketing policy under which they have already taken a brand ambassador, Miss Priti Zinta, for promoting the brand Shyam throughout the length and breadth of India. Along with the brand ambassador cost, the company intends to fund the entire marketing cost of playing the videos and promos of the company in the national TV, print media, social media, Instagram, all the channels for promoting the company brand. So entire expenditure will be met from the proceeds of this issue. So company has kept 6.35 crore for meeting these expenses. Another object of the company from this issue will be to purchase a machinery at their existing manufacturing facility to increase the quality of the products. Although this investment will not lead to capacity expansion, which they have already done in the last three financial year, this investment will just add the more quality in their products. So company have kept 1.63 crore for this particular head. The last and foremost is the installation of solar rooftops grid connected PV system in the company. Company has already 200 kilowatt system already installed in their company. To further strengthen their solar capabilities, the company has all additionally installed in 200 kilowatt system. So when this installation will done, the company electricity cost will reduce to a significant extent, and that will add to the company's future profitability by reducing the cost of production. The amount capped under this side is 64.90 crores. So overall, this is the all the areas where the funds to be raised from the public shall be deployed. Now, friends, I will take you to the presentation of the company to understand the company in detail and take your decision to invest in this company or not. Friends, this company was incorporated in 2010. At present, the company is engaged in the manufacturing and processing of the spices. There are four types of spices offering the company offers. One is the whole spices, one is the blended spices, one is the ground spices. In addition to the spices selling, the company also sells grocery products across the various channels of sale, which I will touch upon later on this my presentation. They have, as of now, 164 SKUs as of now, which keep on increasing year to year basis. They have a presence in 20 Indian states and 5 international markets. They have employees turnover around 390 employees. So overall, the company is doing fairly good. Company has established relationship with 430 plus active distributors across the North India side. The company aims to increase further this distribution level to a new height by expanding into the Central India, South India, or Eastern India. The most USP of the company is the sizes in which they offer their 164 SKUs. They ranges between 5 gram to 25 kgs, ensuring that every type of consumer they cater to. On the revenue front, company is doing fairly good. The company revenue last financial was 125 crores. They have EBITDA of around 14.5 crores and PAT margin of around 8 crores. Significant numbers are there, and company aims to increase them in by offering doing business in much a larger way. The ROC and ROE are very good. ROC equity is 14.1%. The ROC is 39%. Next, the company growth from a very small company to a very large company with an established brand in the state of Rajasthan, Delhi, and Punjab is mainly due to the hard work of our board of directors. Company is ably headed by Mr. Ramodar Agarwal, who is the CMD of the company. He is supported by Mr. Mamta Devi Agarwal, who is the whole-time director, and Vitthal Agarwal, who is also a whole-time director. Vitthal looks after the marketing functions of the company, and Mamtaji look after the production of the blended spices in the company. And Amataji take over the entire operations of the company in guiding the company to reach new heights every year. The company also has a experienced independent director, non-executive directors who took who take care of the company in the form of corporate governance, corporate guidance, and in skill ensuring that everything runs on a smooth way. Next. Now I will touch upon the products company they offer. I already told you they have four type of products they deal, majorly ground spices, in which we supply chilies, red chilies, turmeric, coriander, kutti mix, etc. type of products. In the blended spices, we mix the various spices to make a masala type. We make pav bhaji masala, garam masala, chole masala, sambar masala, all sort of masalas company make, and their blended spices are very well known in the markets of Rajasthan, Delhi, Punjab, and wherever they sell. Whole spices, in which we also have a significant presence. The company sells cloves, cumin seeds, cardamom, cinnamon type products to their consumers. In the company has recently entered into grocery products also. They are selling full makhanas, poha, soya wadi, black salt, etc. to cater all the requirements which a kitchen requires from any person. The most thing important thing to mention is once the sizes are very attractive. They're offering from 5 gram to 25 kgs. Next, the company, as I told you, that these are full categories. The business of the company is increasing in each category on year-to-year basis. You see that in there was the company turnover 67 crore in 2023, which increased to 107 in 2024 and 125 in 2025. Not only the company, the total turnover is increasing on a year-to-year basis, the individual sales of all the four categories is on a rise every year. The ground spices, which were around 46 crore in 2023, increased to 55 crore in 24 and 61 crore in 25. Similarly, in the blended spices also, the turnover was 10 crore. It increased to 18 crore in FY24. It increased to 21 crore in FY25. Whole spices also, it was just 8 crore rupees in FY23. It increased to 30 crore in FY24. It again increased to 36 crore in FY25. So company making rapid strides in all its product categories and increasing the sales. Next, this is the volume growth. Since the turnover has increased, definitely volume has to be increased. So every year in all the categories, the quantity of the products company handled or sold by every year is also increasing. Next, now these four products which company are selling and increasing its sales on a year-to-year basis, the company we need to discuss what is the revenue model, how the company is able to maintain such a growth in every year in last 3 financial years. So company is selling its product under a various multi-channel sales framework. The majorly sales comes from a general trade category, in which company has around 430 wholesale distributors across the India who are purchasing the goods from the company and selling to the various retailer shops across their domain area. Second major area for their sell is the modern trade. In this, company have a tie-up with the all the big chains like DMart, Reliance Fresh, Aadhaar, Metro Cash and Carry, where the company products are displayed and are sold. Company has changed its strategy. It was earlier focusing just only on the kirana trade, but from 2023 onwards, company also has developed another area to develop in addition to the general trade. General trade has been maintained and well maintained by the company, but company has increased its significant presence in the modern trade. In addition to these two areas where company does make major sales, company has also entered in a large way in the quick commerce trade and ensure that its product are listed in all the big platforms like Swiggy, Instamart, Zepto, Blinkit, Flipkart, Manage, everywhere. All the portals are there, and company has ensured that everywhere its products are available for its consumers. In addition to that, company is also focusing on the Horeca sales, where wherein they are tie up with the various hotels, institutions, big chains to supply them their products. In addition to Horega sales, the company is also focusing on the private labeling, export of goods to various countries outside India, and website sales. Company have developed its own website in a such a way that every product of them 160 SKUs are listed on their website. We can go and buy from that also. So overall, company is focusing both on the B2B channel, B2C channel, and D2C channel also. So it's a very handful of companies are in India which have all significant presence in all the three categories of marketing channels. Next, this is the revenue insight of where the company is getting the most of this revenue, from which channel they are getting. So as I told you, the major sales contributor are the general trade and the modern trade, wherein around 50% of the turnover is done from the general trade and modern trade. So overall in FY25, if you go with this, the company around 94% of the revenue is generated from these two categories, general trade and modern trade, and the 6% capacity is for other trades like quick commerce, website sales, Horeca sales, private label, export sales. The company, as you can see that from this table, in March 23, the modern trade sale was just 30 lakh rupees. Since company changes strategy and focus more on the modern trade, just 1 year, the sale from 30 crore has increased to 33 crores. In FY25, such momentum kept on continuous basis. From 33 turnover, it increased to 55 crore turnover. But just focusing on the modern trade doesn't mean the company has have given low preference to general trade. General trade has been increasing also and have been kept at the 66 crore level. So both are doing on a fairly good channel basis. The company sales in quick commerce has been increasing. It was just 34 lakh rupees in 23. Then 24 there was a certain dip, but again 25 they've done 25 lakh rupees, and in just 6 months of the current financial year, their turnover has cut to 91 lakhs from just quick commerce sales, and we hope in this year we will have a substantial figure from quick commerce segment also. Next. So, friends, company volume is been increasing, company turnover is increasing. There has been growth significant in all the channels which they do. The major reason for their growth is the quality of their products. Company as of now holds all the licenses which is required for a food processing company. They have AGMA certifications. Their products are approved in all FSCI approved. In addition to these two quality measures, which every food company is required to have, they have recently launched integrated pest management for responsible sourcing. Under this, the company is getting the contract farming from for its product from the farmers. The management of the company, particularly Mr. Mithil Agarwal, who look after this particular domain in our company, guides the farmers of how much the pesticides, all the drugs, all the and other things which need to be used while in agriculture while producing one particular crop. So with this guidance, company and ensures that the content of the pesticides and other harmful things in the crop which is used for manufacturing processing the mirchi, the masalas, are kept at the lowest level so that they are not injurious to the human health. So this type of certification which the company held is known as IPO category. It's integrated pest management. So it is the only company in India which does such type of exercises, and it gives a quality product to its consumer. And it is only this type of quality and show capabilities the company is able to establish itself as a major brand in the northern India, and company plans to take this journey to the entire national level. Next. In addition to the quality of the products, which company is doing by launching the IPM grade products, the company is also focusing majorly on the marketing to ensure that its brand get a national recognition. So the company have recently had a celebrity in their company in the name of Preeti Zinta. They have ramped up their expenditure under the marketing head. Last 3 years, they are doing a continuous expenditure in this category. They have planned a major marketing campaign in this financial year or coming financial year after the close of the IPO. They will be spending around 6.5 crore rupees and will air various commercial, various promo programs in all the national news channels, digital media, social media, print media, so that the Sham brand gives a due recognition in the market. Next, the company has all presence in 20 Indian states, but major presence is there in the Rajasthan, Punjab, and on the Uttar Pradesh. But company is expanding its presence in entire India. Company have recently acquired one land in the Madhya Pradesh to set up another manufacturing facility in that area to cater the central India and the southern India. The company has already one established manufacturing facility in the Rajasthan, which has been this factory is catering to the entire sale. But after this Madhya Pradesh factory also, which will come into operation in next 2 to 3 years, the company will be also focusing on the northern and southern India. Next. Company is also focusing on the international markets, although not in a big way, but company has decided now to expand its horizon in the international area also. As of now, the company major products are sold to the Middle East countries. Company has recently taken a licenses from the US FDA authority to sell their products in the United States of America also. The company has also taken a license to sell its product in China also. So they taken a GCC certifications which enable them to sell their products in China market also. Next, as I told you, the company has established manufacturing capacity in the state of Rajasthan, state of Rajasthan, particularly in Jaipur. In this facility, the company is making regular capex, and you can see from that for the capacity, installed capacity in FY23, they have a capacity of around 33 tons, 3,300 tons of ground spices. In FY25, it increased to 8760, just 3x the time of the capacity which they have 2023. In blended spices, they have done a major capex. Their capacity was just 480 tons in FY23. It increased to 3120 tons in FY25. So it's more than 7 to 8 times of its existing capacity. Similarly, in whole spices, it was just 1380 tons in FY23. It increased to 6180, leading to 4x growth in their capacity. So these all the major capex which this resulted in such a massive expansion of the capacity was done on 29th of March 2025. So company was just able to get 2 day in the last financial year. But in the current financial year, company is geared up to increase to utilize this excess capacity which they have generated from doing the capex to make a substantial sale in the market to enhance its value, its profitability, and its net worth. Next, company has been good brand and has been able to gain various awards, certifications from the government of India, the state government, central government, and from the various consumer forums and the trade associations. Some of the notable awards which the company is able to get is the Emerging Rajasthan Award in 22. They have been able to get a Bharat Shiromani Award, Bhamasha Samman, USFD restrictions in 2025. In 24, they were able to get Bharat Gaurav Awards, FSI Spices recognitions, Board Export Associations. So these are all the major milestones the company has able to generate while going to such a level in their trade. Next, we go to the financial section of the company. Next slide. Financial section. We can start with the profitability. Just a slide before that. One more back. Yeah. So you can have a now a entire view of the profitability and others operational KPIs numbers to understand the company growth in financial terms. The company turnover was 68 crore in 2023. It increased to 107 in 2024, leading to 58% of the growth in the turnover. Again in 2025, the company turnover raised from 107 crores to 125 crores, leading to 16% growth in revenue from operations. So in last 3 years, the company business has been increasing on a steady pace. The most notable thing about the company that despite the company's turnover has been increasing from 58% then to 16%, company is able to maintain its gross margins, and in fact they have been able and successfully not only maintain have increased their gross margins. The gross margin was just 17% in 2023. It increased to 20% in 2025. So in over the past 3 years, the company has been able to triple its turnover with 3% increase in the gross profit margins. This shows the company has a products are well accepted in the market, and company is a now well-known brand in the northern India. The company EBITDA margin has been steadily increased over the last 3 years. It was just 8.78% in 2023. It increased to 11.65% in 2025. Similar story for the PAT margin also. The company was just 4.30 PAT margin in 2023. The PAT margin has increased to 6.45% in 2025 at a turnover of 124 crores. This has led to a profitability of around 8 crore rupees in the company, and the company with this capacity expansion and national level marketing, the company is poised for a much bigger growth in the coming financial year. Next, please, balance sheet. The company has a fairly good balanced balance sheet, as you can see from the screen. The company has around net worth of 28 crores in September 2025, and the company plans to raise 40 crore with this IPO process. So when you add this 40 crore to the existing net worth of the company net worth crosses around 75 crore, which enable the company to have a steady migration when the company completes 3 years of a semi-listing. Similarly, company has a fairly good borrowing also. Company has a short long-term borrowing of around 8 crore rupees from banks for financing its capex. The company has a significant borrowings from the bank from CC limit. They were around 35 crore CC limit sanctioned in the company. These the funds, the loan funds and the net worth have been deployed in the balance sheet of the company in the asset form, and the current asset majorly into the inventories and to the debtors. Next, please. Next, next, last slide. Next. So now, friends, I have taken you entirely through the presentation of the company. What are the key facts of the company? What are their products? What are their revenue channels? What is the profitability? What are their USPs? So now we come to the question: what is the value proposition of the company? For why should we invest in Shantani Industries? So company has kept a price band of 65 to 70 rupees. This price bands lead to a pre-money valuation of company around 12.94 at price to earning ratio. And when you go to the post money after receiving the funds, the company price to earning ratio is around 17.5. So very attractive pricing model company has adopted. In addition to the pricing, the company has around nine USPs which distinguish itself from other companies in the market. These are: first is the company have a diverse product portfolio. So they have around 164 SKUs as of now in another four categories like ground spices, blended spices, whole spices. So company has a too much presence. So if one product does not click in the market, there are other products which keeps ensuring that company sales is increasing on year-to-year basis. Company have a strong integrated manufacturing lines in the Jaipur, but they have done a massive capex in last three financial year. So they have an ample production capacity. They can handle around 3x of the turnover of existing turnover without doing any more capex in the company. So we can ensure that there will be no major capex in next 3 years due for any product capacity expansion. The company has a pan-India distribution network. As of now, they have 430 distributors, and the company is intending to increase the same on a yearly basis. Company have a various robust multi-channel revenue model. They are catering to various ways in a company can sell the products. They have presence in general trade, modern trade, quick commerce, horeca sales, private labeling, export, etc. So every type of area they have covered it, and the most important thing, they are increasing sale in every category of them. Company is also not just restricted to Rajasthan, Punjab, Haryana. They are planning to go national and even beyond the national to the international level, which will ensure there is a regular increase in sales. Company is also planning to have a strong marketing policy to ensure that their brand Sham is recognized at a national level by launching a massive marketing campaign with such a famous name, Tisinta, strong channel. So these are the major propositions which every investor should take into consideration in addition to the pricing ratios which I've already told you. So overall, this issue it seems to be very good in terms of pricing and in terms of future growth opportunities. So in our opinion, it's a good buy. But Baki rest, you take your advice from your financial advisor and ensure that you invest in the right company. Thank you, everybody.
Yeah. So, sir, we'll begin with the Q&A session now. So, I request all the viewers to post your questions in the comment box. Yes. So, the first question is from Mr. Anil Bhatt. He's asking, how do you differentiate the Shyam brand in a highly fragmented spice market?
So, I would like to welcome all of you, my friends. First of all, you have asked a very right question. The main differentiation of this company is the company has an IPM certified products. First of all, I would like to tell you what is the IPM and why there is a need in the industry for the IPM products. As we know, friends, conventional farming includes use of fertilizers and pesticides in the crop. But as the farmers of the India are not educated in very much, so knowingly or unknowingly, they use a lot of pesticides and fertilizers, which are not safe for the human consumption. So the second option available for the public is organic crop. But there are many challenges for organic farming. The major challenge of the organic farming is the total agricultural land available for organic farming is 1.5% of the total farm presence in India. So from 1.5% land, you cannot fulfill the needs of the whole India. So uh, IPM crop is that facility, or it's the method in which we guide the farmers directly to use the exact or fixed amounts of fertilizers and pesticides in a safe manner that it is safe for human consumption. So basically, अगर हम इसको वेरी इन अ शॉर्ट नोट आई वुड टेल यू कि हम सबको पता है कि अब हमारे जो फल, सब्जी, फ्रूट्स एंड ऑल किसान अब फर्टिलाइजर्स एंड पेस्टिसाइड्स का ज़्यादा यूज़ करते हैं। सो आईपीएम के द्वारा आप कन्वेंशनल खेती के साथ-साथ ऑर्गेनिक को यूज़ करते हुए हम आईपीएम सर्टिफाइड प्रोडक्ट्स डेवलप करते हैं एंड दिस इज़ द मेन डिफरेंशिएशन ऑफ द कंपनी।
Thank you for answering that, sir. Next question. The next question is from okay, skydiving grungy. Okay, so he's asking, good evening, sir. At what price private placement of the shares before IPO?
Yeah, hello. We have just made a placement at 70 rupees, the upper price band of the issue.
Okay, thank you for answering that, sir. The next question is from Ms. Payal Moore. She's asking, what is the long-term vision of for Shyamdani brand, Shyamdani beyond FY28?
Vitalji?
So the long-term vision of Shamdani Industries Limited is like as we told Mr. Holani sir said already, the company has done capex of rupees 18 crore in the last 3 financial year. So company has a capacity 3 times of demand. Like अगर कंपनी के पास में 3 times ऑफ डिमांड आती है तो हम उस डिमांड को केटर कर सकते हैं। सो द our strategy will be to infuse some funds in the marketing and increase the demand, and for that company is infusing some amount in working capital as well, and through this IPO as well, through this IPO हम लोग ग्लोबल अपॉर्चुनिटीज को भी देख रहे हैं एंड कंपनी जो अपना प्रेजेंस है वो जनरल ट्रेड, मॉडर्न ट्रेड एंड अदर रेवेन्यू मॉडल्स के अंदर भी इंक्रीज कर रही है।
Okay, thank you for answering that, sir. Next question. The next question is from Mr. Neeraj Apte. He's asking, how scalable is the current business model without major capex?
The company has a very scalar model. As I already told you in my presentation, the company has done a major capex of 18 crore in last 2-3 financial year. And with this capex, the company has a capacity to do 3x, 400x of the turnover from existing turnover without doing any capex. So as of now, the company is doing a 125 crore turnover, and with such a massive capex has done by the management of the company in the company is well poised to the capex of around 400 crores or 500 crores in financial without doing any major capex in the company. Anything more that Vithalji will add to this?
So as Mr. Holani sir said correctly, uh, हम लोगों को कैपेक्स करने की ज़्यादा रिक्वायरमेंट नहीं है बिकॉज द कंपनी हैज done a massive capex as well as technological upgradation as well. Like in the last year, we have implemented SAP system in our company. So it is also a major part of capex. So company has upgraded its technology as well as the company has upgraded its infrastructure. So now the company has to only invest some amount in marketing only.
Okay, thank you for answering that, sir. Next question. The next question is from Ms. Aditi Menon. She's asking, which product categories, ground, blended, or whole grocery, will drive future growth?
So very right question. We cover the whole basket of the consumer. We cover blended spices, whole spices, and grocery products, the complete basket. So the company's major sale right now is coming from ground spices and whole spices. So the company is increasing its focus on blended spices and grocery products as well. So company is aiming major growth in blended spices, whole spices, and as well as grocery products as well.
Okay, Thank you for answering that, sir. Next question. The next question is from Mr. Virendra Pinjarkar. He's asking, are you planning to launch an organic or premium line to improve the current pack margin?
So, as we have told earlier, the IPM category is already a premium category. Like uh, we are we are the pioneers in this industry, and we are the first company in this category to take the IPM initiative. So IPM category is already premium than the conventional spices. And in the last 3 years, we have done a capex and a technological upgradation. Through that, the company is able to increase its PAT margin by uh, improved efficiency and quality improvements, which the customers are liking it.
Okay, thank you for answering that, sir. The next question is from Mr. Shantanu Oza. He's asking, export sales dropped from rupees 284 lakhs to rupees 169 lakhs in FY25. Why did exports decline while domestic revenue grew?
So as we can see, before 29, before major capex done in 29th March 2025, our capacity utilization was near about to on the full side. Like the plant capacity is was utilized on the full. So company revenue in the export sales has dropped due to our capacity issues. But now the company export sales is growing after the expansion in the capacity.
Okay, thank you for answering that, sir. The next question is from Mr. Rohan Jha. He's asking, your total marketing expenses around 1.77% of revenue. Competitors like Everest spend much more. How will you compete with such a low budget?
So
समझ लीजिए.
uh,
हेलो एवरीबॉडी. हम अपने ग्राहकों को रिजनेबल प्राइस पर उच्च क्वालिटी उपलब्ध कराना चाहते हैं. इसलिए हम एक्सेस मार्केटिंग पर अभी खर्च नहीं कर रहे हैं. हम कस्टमर को क्वालिटी अच्छी दे रहे हैं और प्राइस अच्छी दे रहे हैं. ये हमारा मॉडल है.
and so eventually we are increasing the percentage revenue in the marketing spend. That's why in the DRSP also we have mentioned that in this 2 years we will spend rupees approx 6 crores in the marketing.
Okay, thank you for answering that, sir. Next question. Next question is from Mr. Suraj Joshi. He's asking, you have already placed orders for machinery. Who are the vendors and are uh, are any of them related parties?
So the vendors are not from the related parties only. The vendors are, I guess, Mr. Hurani ji.
Yeah, just a minute. Yeah, there are two vendors who are interconnected in this transaction. The machines will be in local ones will be taken from India only, and the various suppliers are Cosmic India Private Limited, SN Flow Technologies, AY Company, Infinity Automated Solutions. These all are written on the page number 113 of the RHP. You can go the same, see the RHP, and you will get all your answers there only. The name of the supplier, the address of the supplier, the pricing, the date of the placing of the order, the expected delivery, everything is mentioned in the RHP with a
And the reason
declaration.
behind,
With a declaration, there are no related party transactions.
yes, and basically they are aimed for the quality improvement only.
Yeah.
Okay, thank you for answering that, sir. Next question. The next question is from Mr. Subodh Joshi. He's asking, Shamdani has tie-ups with Swiggy, Instamart, Flipkart, Minutes, Blinkit, and Zepto. What percentage of your H1 FY26 revenue came from these platforms?
We are able to generate a 91 lakh sales from the sale to these via from these platforms in H1 of FY26, and 63 crore turnover we have done in FY1 of FY26, and 1 crore from these platforms. So we can arrive only 1.58% of the turnover is generated from this, but the company is hopeful this revenue channel will contribute around 4 to 5% in very soon in near future.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Shankar Verma. He's asking, what is the strategy to scale D2C website sales meaningfully?
D2C
So
website
we
sales generally increases when the company has a very well defined marketing strategy across the India, and when the brand of the company is famous across the India. So company, as I already told you in our RHP also, we have a well-defined marketing policy. Company is planning to shell out 6.6 crore rupees in this particular head. They have also had a very well-known personality in the name of Pretty Zinta for this. So when this all commercials will come into the market, the company will be able to scale its D2C website sales also. More will be added by Vittalji.
As you have stated correctly, sir, the company is already focusing on quick e-commerce platform and D2C, our own website sales as well. The company has significantly improved our sales in the quick e-commerce platform and website sales.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Vedant Shetty. He's asking, who are the company's main customers?
So our main customers are direct consumers only. Company deals in consumer product or branded products only. We have B2B channels and B2C channels. So the company operates in the brand name of Shyam only. But the general public is the main consumer.
But in the accounting firm, we can say that company has a four different categories of channels also. So in the modern trade category, DMart is their major customer. Around 30% of the sales is done to the DMart. When we go to the Kirana trade category, the company has major distributors who buy the company for very large quantity and sell them. In terms of quick commerce, the company has a customer in the form of Zepto, Blinkit, etc. When they purchase from their platform, the company sells. But eventually, the Victor is right. The entire consumers are the major customers.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Raghav Datta. He's asking, you don't manufacture rice or poha in-house. What is the quality control mechanism for these third-party products sold under the Shyam brand?
So yes, poha and rice are sourced from farmers only, and we have in-house laboratory approved from AgMark Department of India. So once the raw material came in our factory premises, it is go through the QC department, and once the QC is done, it further go for the production process.
for to manufacture product.
The cleaning and sanitation process के लिए तो जाता ही है.
Okay, the next question is from Ms. Anandi Mittal. She's asking, the company is repaying 1000 lakhs of debt. Will you be taking fresh loans against this debt?
Not right now. We are we are not planning.
So if the company need to take a fresh loan, then there was no need to repay the borrowings from the IPO proceeds. So once the company is planning to repay 110 crores out of the IPO proceeds, there is no question to taking the fresh debt after the IPO process. Because if you see our object of the issue, it is very well comprehensively planned by the management of the company. They have taken the funds from working capital also. They have taken the funds for the marketing. They have taken the funds for the quality enhancement. They have taken funds for the solar installation. They have also reduced their borrowings by paying 10 crores. In addition to that, the company has a various flows for good internal accruals. Last year, they were able to generate a profitability of 8 crores, and the first half of this financial year, they able to generate a profit of 4.2 crores, and are, as per if we analyze them, so they are going much ahead with their last number also. So we don't think the company has a plan to take a fresh loan after the IPO.
Okay. Thank you for answering that, sir. Next question. Next question is from Mr. Shantanu Oza. He's asking, you rely on five third-party cold storage facilities. What is the impact on COGS if these providers hike rates by 20%?
You know.
Mm.
So, if firstly to increase the 20% cost is not that easy, and secondly, if the prices go high, the impact will not be too much, I guess, because the total expense of the cold storages in this company is not too much.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Harshit. He's asking, what are the levers for operating margin expansion going forward?
I know. Hulani sir.
Holani sir.
As I told you, the company has been able to increase its operating margin from last 3 years. Last year, they were in 23, they have around 17% gross margin. It increased to 20% in FY25. And the company in the current financial, in the first half of the 6 year, the company margin is also increasing. It has led to 23% gross margin. So you can see from the last 3.5 year, every year the company operating margin has been increasing by a 2% or 3%. So company is able to maintain its gross operating margin, not only maintain, has been able to successfully increase the same with the enhanced turnover. And the company is
And
hopeful that they will be able
enhance
to
it.
maintain this trajectory in the future also.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Darshil Jhaveri. He's asking, our margins have increased. Will we be able to maintain it? What are the margin drivers?
So, as Mr. Hulani sir already stated, that the company has done massive capex in the last 3 years, and our capacity has increased. So we don't have to do much of capex in the near future. So the company will be able to I, to maintain it.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Nikunj Patil. He's asking, are there any inorganic growth or acquisition plans?
As of now, there is no plan for an inorganic growth or by acquiring any other company. But if any good opportunity comes for the company, the management will be willingly and happily will look into the matter and take the decision in the best interest of the company.
Okay. Thank you for answering that, sir. Next question. Next question is from Mr. Gokul. He's asking, how does volatility in spice prices impact gross margins?
Mithalji?
So yes, the prices of raw materials does affects our gross margins, but the company already forecast we already focus on the forecasting of our annual consumption, and we do procure accordingly. And secondly, the company is going towards the backward integration where we are working directly with the farmers and we source our raw materials accordingly.
Okay, thank you for answering that, sir. Next question. Next question is from Mr. Harshit. He's asking how we see the geography mix going forward after entering into US market.
Geography mix.
जो स्टाफ का लाइसेंस लिया है और एक कंटेनर जो है साउथ में काफी लोग हैं।
So,
US market
uh,
geography, the company will be focusing on the those area where the Indian origin population is wholly dominated. So wherever in America they have Indian population, the company will focus.
Okay, thank you for answering that, sir. Next question. So the next question is from Miss Nisha Barot. She's asking, the company has seen negative cash flows from operating and investing activities in FY25 and FY24. When do you expect to become consistently cash flow from operations positive?
Yeah, this is the negative cash flows from operating and investing in FY24 and 25, majorly from the two reasons. One is the company has been increasing its turnover on by 58% or 16% in last two financial year. With the growth of the turnover, the company was required to have a huge inventory in its portfolio. The company has inventory has increased from 10 crore in 23 to around 30 crore in 24, then again to 45 crore in 25. So when there is an increase in the inventory levels in the company, which leads to a negative cash flow, but this negative cash flow is actually a positive for the company, because with this the company is able to generate a much more profits. They have just 3 crore profit in 2023 and able to generate a profit of 8 crore in 2025 only because of major investment in the inventory. With all the major has been done, so we can expect with this trajectory, the company will have a positive cash flows in the current or next financial year. Similarly, in the investing activity, the company has a negative cash flow because they have done a major capex, as Vittalji told you in his speech, that they have done 18 crore capex in last two financial year. That has drained a negative cash flow from investing activity. But now, since the major capex has been done, the company has no plans to do major capex in coming future years. So definitely, the investing activity also will have a positive or a settled cash flow in the near future.
Okay, thank you for answering that, sir. So Mr. Shankar Verma is asking, at what revenue level will current capacities reach optimum utilization?
Vittalji?
so the current production capacity is approximately 20,000 metric tons, and with that production capacity, the company will be able to generate revenue of uh, rupees around 400 to 450 crores.
Okay, thank you for answering that, sir. So the next question is from Ms. Dia Patel. She is asking, do you enter into long-term contracts with farmers or mandis?
So we have entered into long-term contract with directly with farmers only. where we give certain guidelines to the farmers and we give a rate assurance to farmers as well.
Okay, thank you for answering that, sir. The next question is from Mr. Darshil. He's asking, what is seasonality in our business? What is seasonality in our business? Is H1 okay? What is seasonality in our business, and is H1 better or H2?
Okay. Uh, just 1 second. I think there's an- What is the seasonality of our business? And
Yes,
I
definitely
think
the
got it.
company has a seasonality because major crops of the
Yes.
company comes in the winter session. So that chili comes in the winter. The company has a major purchase in the winter session. The sales also in the second half of the financial year. The company has historically also H2 has a better numbers in terms of the H1.
Okay, thank you for answering that, sir. The next question is from Miss Krisha. She's asking, what drove the sharp improvement in EBITDA margins over the last 3 years?
The last 3 year EBITDA margin significantly increased, as you can see from our financial statements. The major drivers for such sharp improvement in the EBITDA is this change in the strategy of the company. The company was earlier focusing majorly on the Kirana. With 2023 onwards, they have been focusing not only on the Kirana trades, they have increased a significant presence in modern trade, and they are also major their product listed on a major quick commerce platform, and they are able to generate a good substantial sales with a very good margin. So these all are the drivers for a sharp improvement in EBITDA in last 3 years.
Okay, thank you for answering that, sir. Next question. Okay, so Mr. Harshal says all the best for your writing. Rohan Jha says great life, thank you. So I think, sir, we have covered most of the questions here. So thank you so much, Vittal sir and Ramatar sir and Ashok sir, and all the best for your IPO.
Thank
Thank you.
Thank you.